Hi, Mark Yagi here. Here's why you shouldn't get involved in these crazy meme stocks. So let's take a look at the chart here today. This is Gamestop. Now, Gamestop, a couple days ago, this guy named Roaring Kitty, whatever, that's the handle on X, came out and said, well, basically, essentially said, buy GameStop. It just put a post up and everybody interpreted it as buy GameStop. And the stock went, if you look at this chart, it went from 19, which is a legitimate breakout point, all the way to 64 bucks. That's a triple. Right? In 3 days. That's really risky, right? Some people got really lucky, including the guy that put out the tweet, I'm sure. And then a bunch of people got smoked because this is one of the most shorted stocks on the street, which means that as it went up, it got smoked. And a lot of hedge funds were short this stock and got hammered. So you can see the stock gapped up after this post came out and it went up to $64. Let's zoom in a little bit. You could take a look at the 10-minute chart. You could see after it hit that high of $64, it's done nothing but come down. Even today, it's been halted a couple times today already. It's already traded 48 million shares, which is 930% its average volume by this time. And the stock is down $16 right now, or 32%. So if you went to bed last night thinking this stock was going to go up and you bought it, well, you woke up this morning, you're down 32%. That's not good. That's why you shouldn't be trading this thing. It's really risky. However, I do want to give you like the other side of this. If you are willing to sell calls on this, there's some risk there too, but it's way less risk because your upside is capped, but so is your downside because you get to protect yourself a little bit on the downside. So looking at this option chain, you can see the stock is right now about $33. So if we go down here to the 33s, they expire in 1 day. So that's tomorrow essentially, right? Or I guess it's Friday. So they will expire in a day of trading, and they're getting you can get like $5.80 for these things. And that's a 17% gain if you just buy the stock and sell the call against it, and it doesn't go down again like it did today. So if it stays above $33, you're gonna making 17%. Like that's double what the S&P 500 does in a year, and this is gonna happen in a day and a half. But you got to be able to withstand this craziness that I just pointed out about how the stock is down 32% overnight. So you can make money in covered calls when you trade these really volatile names. I just don't recommend that you do it because it's crazy. Like you could wake up tomorrow morning and the stock could be, at $22, right? And that $5 is good. It's going to give you a little bit of cushion on the downside. And yes, you can make 17%. And with the volatility that it's got, you can go back and sell the calls again and pick up another $5, let's say. But it's a risky game. So somebody's making some money and somebody's getting smoked out there. It's probably a bit of both. Don't you be one of them. But notice and watch and see if there are opportunities when these crazy things happen. I'll see you on the next video.